If you want to target a 20 on 20 on your interpretation question, then watch this video till the end. I'm Megha Vansali, ACCA and the Indian Qualified Chartered Accountant. In this FR series of past paper, I'm solving all past papers of FR, and today we'll be discussing a very important and the biggest pain point of FR students, interpretation and analysis of question. I'm going to be giving you a lot of tips, so please stay tuned till the end. And do share it with more of your FR friends and subscribe to my channel to stay updated with more such content. Now some tips before we begin, please read the requirement first and then the question so that you know what information you need to look for in the question. And do not spend too much time on doing your calculation, because each of your ratio calculation only gives you half a mark. So don't spend too much time writing the formula and then solving it, okay. Writing the formula is not going to give you any step marks also. So just do the calculation, put the correct numbers. However, you have to show the calculation. So my suggestion is, if you're doing it on Excel, so when someone goes to the cell, they should be able to see what is the numerator, what is the denominator. Even if you've done that, that is kind of good enough. It will give you marks. So spend little time on your calculation. Now for the rest of the part of the question, so let's say 5 ratios are asked for 2 years. So 10 ratios you're calculating in total. So 5 marks is for ratios. The balance 15 marks that you're going to be getting is just for your analysis. So this 15 marks, simply follow the rule 1.1 mark. So just write relevant 15 points and you're going to be getting your marks for that. So stick to that. Now, what should you be writing in those points is important, okay. So please try and understand more from a practical aspect, okay. If I am an ACCA and if I am getting a job and if my boss is asking me to do some analysis, he will not expect me to just do a calculation and give him the figures, right? You know, your boss is going to fire you immediately if you're going to do that. So please don't do that on a job. Now what he will expect that you give him an analysis of why this ratio is there, how has it moved from the last year, how are we comparing it with the industry standard. Now again, with ratios, what you have to remember is simply talking that I have made a profit of 50%, but I cannot comment it's good or bad. I need to compare it with last year, or I need to compare it with other competitors. So ratios are always to be compared and then given a comment upon. So that's one thing you need to keep in mind. So always compare them. Then the second thing that you need to keep in mind is, you have to state why the ratio has moved during the year. So what has impacted the ratio? Now to look at the impact, it's simple. Look at what is the numerator, what is the denominator. If the numerator increases, ratio will increase. If the denominator decreases, ratio will increase, and vice versa. So why is the numerator increased? Why is the numerator decreased? Now that's what you really need to talk about. So that's how you can decode your ratios. Second, what you're expected is to give the impact. So if I'm having a low gross profit during the year, what is the impact on my business? What further steps can I take to make sure my gross profit is staying in line? So these are the things that you should be talking in your analysis part, and that is really what is important, and that will give you the marks. Now let's get on to the question and the solution quickly. So first read the question, then the requirement. Reply to the 4 observation of the CEO. Now if you see, it's for typically 8 marks, so 2 points per observation is good enough. So you can write if the observation is correct, incorrect, and then what is the impact, or what you could look at to analyze this in a better way. Using the financial statement provided, calculate the following ratios for Gregory Co. for the year ended 31st March 2016 and 2015 and comment on the comparative performance. So your past year and current year is what you need to analyze. Always ratios have to be compared to something to give a comment upon. So I need to calculate return on capital employed, net asset turnover, gross profit margin, operating profit margin. 4 marks are available for the ratio calculation. So they have directly given 4 marks available. So if you see, 4 into 2, 8 ratios I need to calculate, half a mark per ratio. Balance of the question is for 12 marks, so 12 valid points is what I need to make. Note, your answers to A and B should reflect the impact of the consolidation of Tamsin Co. during the year ended 31st March 2016. Now let's read. Gregory Co. is a listed company and until 1st October 2015 it had no subsidiaries. On that date it acquired 75% of Tamsin Co. equity share by means of share exchange of 2 new shares in Gregory Co. for every 5 shares acquired in Tamsin Co. So I am having a subsidiary acquisition. Now this acquisition is in the middle of the year, it is happening on 31st October and my year end is basically March. So 6 months is when I am having my sole business and 6 months is mine plus subsidiaries business is what is there. Then I have given shares for acquiring this subsidiary. These shares were recorded at the market price on the day of acquisition and were the only shares issued by Gregory Co. during the year ended 31st March 2016. Summarized financial statement of Gregory Co. as a single entity at 31st March 2015 and as a group at 31st March 2016 are given below. So this is my P&L and my balance sheet. Now what you have to keep in mind is they are comparing a standalone with a group company, which is quite incorrect. You cannot compare a standalone with a group company because the results are going to be different. Ideally you should compare Gregory standalone 2015 with Gregory standalone 2016. That's a better comparison. You can't directly compare these two. Now other information. Each month since the inception, Gregory Co.'s shares to Tamsin Co. were consistently $2 million. Gregory Co. had chosen to only make a gross profit margin of 10% on these sales as Tamsin Co. is a part of the group. The value of property, plant and equipment held by both the companies have been rising for several years. On reviewing the above financial statement, Gregory Co.'s CEO made the following observation. So we need to comment on these observations. I see that the profit for the year has increased by 1 million, which is up 20% on last year. But I thought it would be more as Tamsin Co. was supposed to be very profitable company. So now when I look at profit here, so last year's profit was 5,000, this year's is 6,000. So here first of all you will have to say the profit are not comparable because we are comparing standalone of Gregory's versus group. So that's incorrect. Second, the figure that we have added of Tamsin Co. is only for 6 months. So we can't really figure out if Tamsin Co. is really profitable or no. So what we need to do is actually remove profit of 6 months of Tamsin Co. and then evaluate the both. That is one. Second, if you see this profit also some part is allocatable to NCI. So we have to exclude that to see a comparison. So that you can talk about these factors when you have to talk about this increase in profit figure. Now the second point, I have calculated the earning per share for 2016 at 13 cents, which is 6,000 divided by 46,000 into 100. So first of all we saw this profit of 6,000 is incorrect because here we need to take only profit attributable to equity shareholders. So the numerator is incorrect, it should be 5,700. Second, the denominator is 46,100 but 6,000 shares that were issued during the year was only for 6 months. So if I look at the weighted average, it will be only 3,000 shares. So I have to take 43,000 here. So both the numerator denominator are wrong. The calculation is not correct. So please redo the calculation. So you will have to do 5,700 divided by 43,000, which will give me 13.3 cents. That's my actual EPS. And for 2015 at 12.5 cents. And although the profit has increased 20%, our EPS has barely changed. So again, you'd redo your EPS calculation and say it is 13.3 cents. Then you will say the profit has not actually moved 20% because the figures that we have taken for comparisons are incorrect. Therefore, it is not feasible for us to do a comparison of 20% profit with our EPS. So this comparison is not holding good and this analysis cannot be done. That's what you can comment upon. Now the next point, I am worried that the low price at which we are selling goods to Tamps & Co is undermining our group's overall profitability. Now this question is, this comment basically is quite surprising, because whenever we are preparing a group financial statements, we eliminate all our intercompany transaction. So whatever sales we have done to Tamps & Co has to be eliminated and would have been eliminated. So if you are selling at 10%, 15%, 20%, it does not matter at all. So you write that in this comment. Last one, I note that our share price is now $2.3. How does this compare with our share price immediately before we bought Tamps & Co? So in this case, now we need to first calculate our share price just before we acquired our subsidiary and then talk about the comparison. So now how do we do this? So in the question they have said that the shares that we have issued to Tamps & Co is at the market price on that date. Now how many shares have we issued? We have issued 6,000 shares. Now at what price we would have issued? You can get from share capital plus share premium. So 6,000 plus 6,000, 12,000 was the total value of the shares that I have issued, and I have issued 6,000 shares. So the price per share is $2. So first do the calculation, then say the price as on the date of acquisition was $2 and today it is $2.3. So definitely there has been a positive movement in the 6 months, and you can give a percentage also. So you could do like a 0.3 divided by 2. So it's a 15% movement during the 6 months, which seems to be positive, and you could give a comment around that. So this is how you could comment on the 4 observations of the CEO. Now moving on to the next part, where we have to quickly do the ratio calculation and give in the comment. So let's calculate these quickly here. First we need to calculate return on capital employed. I am going to simply do this on calculator. I am not going to be doing this here, because like I mentioned, you are not going to get any extra marks for this. You can also put in a table where you say ratios, you say 2016 and then you say 2015. So first we have return on capital employed. Now if I have to calculate return on capital employed, I know you just take operating profit divided by capital employed. Now capital employed can be calculated by 2 ways, asset minus current liabilities or all your equity plus reserve. So this would be your capital employed. So your operating profit is 7,500 divided by 74,300. You can simply put here the figures also, 7,500 divided by 74,300. So here the examiner knows from what figures you have done the calculation and you have got this value. 7,500 will give me 10.09%. Same thing if I do for last year, it will be 6,000 divided by 53,000, which is equal to 11.32%. Now you need to give a comment. So because you have calculated these ratios, always give a comment related to the ratios. That's why they are asking you to calculate the ratio. Now we have seen that this return on capital employed has decreased during the year. So you could talk about why there is a decrease. So there are multiple reasons. One, the capital employed has increased during the year because we have issued new shares. That's another one reason. The operating profit has declined during the year because when you see the comparison of last year to the current year, even with a subsidiary we are having lower profit. So that could be another reason why our capital employed has decreased during the year. Also you can here talk about it is not very feasible to do a comparison because the profit includes only 6 months profit of the subsidiary, whereas the capital employed talks about the total share capital paid to the subsidiary. So the comparison is of 6 months profit, whereas share capital for the entire subsidiary. So comparison is little off. Maybe that's why there is a decrease in the return on capital employed. So you could talk about these factors in this particular point. So if you see, it is for basically 8 marks. So 2 points if you talk about each of these factors will fetch you good enough marks. Now the next one, net asset turnover. Now even if you don't know how to calculate, you just use your common sense in the examination. What is my net assets? Total asset minus liability, that's my net asset. What is turnover? Turnover is sales. So basically sales divided by my net asset will give you your net asset turnover. So this indicates basically how many times of my asset am I able to generate my revenue. That's what this ratio basically talks about. So now quickly calculating this is my revenue is 46,500 divided by my net assets, which is nothing but 74,300, or you could do 110,600 minus 27,300 will give you the same answer, which will be equal to 0.63. And if I do this for last year, my sales is given to me at 28,000 divided by my net assets, which is 53,000. How long is this? Okay, it will take 2 more minutes. So you will get 0.53. So you will see that this net asset turnover has increased during the year, which is a positive indicator. That means I am able to generate more revenue for every $1 that I am spending on my asset. So I am generating a 0.63 cent revenue for every $1 investment done in an asset. That's what your net asset turnover talks about. Increase during the year, so it's positive. Now again, factors that have resulted to the increase is because I have included the assets of my subsidiary. Now these assets, again, all the assets are included, whereas my revenue is only for 6 months. So again, the ratio analysis is not very accurate because revenue is for 6 months, but asset generated is for entire business. Second, all the assets of my subsidiary I have taken at the fair value, whereas my organization's asset might be accounted at cost. So the total net assets that I have taken might not be a correct value. Asset value could still be higher, and that's why this ratio is not giving me an exact accurate position. However, but on the face of it, it is a positive indicator. Now moving on to the next one, I think it's very simple to calculate gross profit margin and operating profit margin. So I'll quickly do the calculation both together. Gross profit, I know is basically 9,300 divided by my sales. So 9,300 divided by 46,500 will give me a 20% gross profit margin. And same thing if I do for last year, will give me a 25.71 percentage. And if I do operating profit margin calculation, 7,500 divided by 46,500, which will give me 16.1 percentage. And same thing for last year, if I do 6,000 divided by 28,000 will give me 21.4 percentage. So you can see both your gross profit and operating margins have declined during the year. So there is something that you are not doing well, or basically you can talk about Gregory's not performing well during the year, because you can see the gross profit margin has dipped from 25 to 20. operating margin from 21 to 16 percentage. So there has been a dip in the profit during the year. So we need to further analyze why is there a dip, even though we've included 6 months sales figure, profit figure of subsidiary, but still there is a decline during the year. So reasons of decline could be dip in sales, could be high expense that you have incurred. Now how do you analyze high expense? So just do a difference. Okay, so if you will see last year's gross profit and operating margin, 25 minus 21, there's a 4% expense percentage. Same percentage has been maintained during the year. So 20 minus 16, 4 percentage. So your operating expense as a whole has not substantially increased during the year. So my operating expenses tend to remain the same, but my revenue has declined. So it's something that the organization further needs to look at, because decline in revenue is a negative indicator for the company. So you can talk about that. You can talk about how 6 months sales have included, but still there is no better performance of the organization. Then you could talk about that basically their operating expense has remained the same from the last year. So a company is able to maintain the expense at the similar level. Then you can also talk about how it's not a good comparison, because I'm doing a group versus single standalone comparison. It would be better that I do comparison of Gregory's standalone versus standalone to actually figure out if it is Gregory's that's the problem or the subsidiary is the problem. So that's also one point that you can talk about over here. So these are different things that you can talk about when you're talking about your gross profit analysis. Yes, you could also include a revenue or trend analysis. So from last year of 28,000 to 46,500, how much is the movement in the revenue during the year? So revenue has increased, but margins are not increasing, maybe because my cost of sales has become very, very high during the year. So these factors you could talk about. So this is how you go about analyzing your analysis and interpretation question. Please break down each of the data given in the question, break down the requirement, break down the formula, what is the numerator, what is the denominator, and then you can simply talk about the numerator and the denominator. Guys, please remember, you are professionals, so you need to analyze the financial statements like professionals. Just don't do the calculation, will not fetch you any marks in the exam. And I hope you've got a fair idea of how to solve your analysis and interpretation question. In case you want me to do more of these questions, do drop in a comment below and I'll be uploading those videos very soon. Guys, do not forget to subscribe to my channel. Lot of FR tips coming up ahead. And please do share the video with more of your friends. Do like the video, drop in a comment below. And I'll be back with more such content. Till then, take care. See you all.